It's my pleasure to welcome Ms. Valentina Pasquali, Senior Editor at Arabian Gulf Business Insight, who will guide our distinguished panelists in today's discussion. So, Signorina Pasquali.
I've been already introduced as an Italian, so I apologize if I butcher names, but that's my excuse. Thank you very much for joining us. You've made it through the end of the day, and that's amazing. I think it's been a great conference, and we hope this final panel can be a real treat for you in terms of bringing together a lot of the things that we've discussed in the morning and over lunch. Valentina Pasquali is my name, and AGBI, Arabian Gulf Business Insight, is a new startup. We're about 3 years old. We're based out of Dubai. We have an office in London, reporters in several countries. I'm here in Washington. We cover everything, trade, investment, business, that directly or indirectly affects the Gulf as well as the wider Middle East. I'm really honored to be here today. We have a great lineup of speakers, whom I'll introduce in a second. We will be discussing some of the hottest topics out there and really top off the conversation that we've seen. Essentially, we're going to be looking at how Gulf states are really trying to up investment in innovation, whether it's climate tech, semiconductors, healthcare tech was mentioned this morning. At this time when they're really pressing the accelerator on their drives to diversify their economies away from hydrocarbons. I'll open it up with a couple of questions for each of the speakers. Then we'll move to, if we have time, get some audience questions and some final remarks. We're a bit late. I don't want to go much past beyond 3 p.m. We can play it around 5 minutes or so extra, maybe. As for the speakers that are with us today, Director General Mohsin Jabri of the Oman Net Zero Center, an institution that's been around for almost a year, and he will tell us more about it. Rachel Ziemba, whom you've had the pleasure to meet already in the previous conversation. She's a macro strategist out of New York and a non-resident non-resident fellow at Gulf International Forum. And joining us online is Dr. Abdullah Baabood, who's an Omani academic, currently holds the chair of the State of Qatar in Islamic Area Studies, and is also a visiting professor at Waseda University in Tokyo, Japan. Thank you very much for being with us. We have heard all day how extraordinary of the time this is for the GCC and the role it plays in the world. It seems to me that so much that's happening there, from artificial intelligence to sustainability to critical minerals, it really is also at the forefront of sort of the top global economic trends. With that and without further ado, I wanted to open it up by asking the Director General, Mr. Al-Jabri, sort of the view from Oman on sustainability, the work of the Oman Net Zero Center, but I want to put it in context of the fact that it seems to me that sustainability has perhaps lost a little bit of its shine in the past year or so, especially with the return of President Donald Trump to the White House. He clearly favors what we can call an all-of-the-above approach to energy that has turned a little bit away from renewables, much more friendly to fossil fuels. So what does that do to efforts that you're sort of driving to raise capital and to promote investments in the transition and in green energy? Are there new mechanisms, initiatives, policy changes that you're exploring?
Thank you very much for the introduction, and very glad to be part of the session. Actually, this is very difficult question usually when you are talking about the current setup and the international setup. With the what's happening in US. I think that's something very critical. However, whenever we are talking about climate resilience or the decarbonization, we in Oman believe that this could come with opportunity for the country. So how we can unlock this kind of opportunity, diversify our economy. Here today, His Excellency, when he was talking about unlocking certain kind of business opportunity down to the country. And I think with that, when Oman announced the net zero target by 2050, and also the directive from His Majesty, they form Oman Net Zero Center in order to drive this further, down the road and ensure that we will have the balance between the environmental benefit versus social and also the economic setup. And I think we were doing a lot of, internal assessment and analysis, and we come across certain kind of mechanism to bring the best kind of investment to the country to enhance our setup. And I think with that, keeping in our mind that there's certain kind of clauses within Paris Agreement which enable the developing country to get tap into the low cost of capital coming from developed country to support the transition toward the net zero target. So I think that was in our mind when we started, but at that stage it was very difficult because we did not have the right project to go and ask or seek for this kind of international funds. In addition to that, you already mentioned the sustainability, because sustainability is very critical. A lot of requirement coming more specifically with ESG disclosure. If you did not do the right setup, you will not be able to attract this kind of finance. And luckily, I was leading green and sustainable finance ecosystem development of the country under Ministry of Finance before joining Oman Net Zero Center. And at that stage, we came to a conclusion. If we did not develop a comprehensive ecosystem for ESG disclosure, we will not be able to bring this kind of investment to the country. And I think that was one of the drivers to develop the whole ecosystem. And it was developed. Within 2 years, we get ESG framework for listed company. It's proven within this year, 2025. It's mandatory for the listed company to, report their ESG disclosure. OIA company also, Oman Investment Authority, it's a government-linked company. They also developed their guiding principle for ESG. With that, when we developed the ESG, then at that time we said, now the best time to go to the next step. Next step, how we could, as Oman, unlock certain kind of opportunity to attract a green and international kind of fund. There were several kind of funds internationally available, and now we are supporting the Development Bank in Oman to become the first accredited entity in the GCC toward the Green Climate Fund, which they are offering, concessional loans, and Oman is part of this country which is entitled for. So I think that's a green finance, something very critical for us, and down the road with the support from the team, whenever we will be ready with a project, we will start applying. Second element, which is very critical, is activating the role of carbon market. Carbon market is another tool of bringing the, capital to invest, for certain kind of activity within the country. And we believe that if we will be able to activate the carbon market in Oman, we will start, by the way, with the voluntary carbon market, but in the future, we will go toward, a bilateral kind of agreement, and then we could also sell our certification in certain kind of compliance market. This will enable also Oman to bring certain kind of capital to be invested for green and sustainable link projects. All of these, it's a great, but yet, to start recognizing the outcome. You already mentioned that the center is very, young, so we only completed our 9 months from the day of formation. We revised our net zero strategy so far. We developed the framework for the carbon market and now in the cabinet for approval. And the third element, we already start developing a pool of projects. Currently, it's around 120 projects, and we know what will be the required costs coming to Oman in order to achieve this kind of for projects. A lot of things happening, and looking forward to see that, the outcome of this effort in the country.
This was very interesting, and Rachel, to bring it to you and open it up to the GCC sort of more widely. There was a report that came out last month that suggested, I think it was out of PwC, suggested that the GCC is still attracting a very, very small portion of global green FDI, although there's potential to do so much more, as we're obviously hearing, by harnessing energy resources and the work on renewables. So I was wondering if you could talk a little bit about why do you think there is this gap? Are there, as a foreign investors weigh green FDI in the GCC, how do they balance sort of opportunities and risk? What are the questions swirling around still?
Yeah, it's a very good question, and great to sort of hear about Oman's approach, because I think this question mark about partnering and pooling funds is important. So I guess I would step back and say something before we get into the question of why is the GCC not attracting a lot of green FDI, but to make a point I often make to people who come to me and say, well, the US has changed some of its policies, the development aid is not there anymore. Obviously, China maybe is not doing as many Belt and Road projects anymore. What's going to happen? How are we going to meet our goals? And we're still a long way from meeting our goals. But one of the things I often tell them is that the GCC, especially the UAE, but actually it's a general trend, is actually one of the greatest outbound sources of green FDI. So in this conversation, especially as we broaden this from the GCC, you think about Mubadala and a variety of actors very sort of active in solar projects across North Africa, across Africa, the Qatar Investment Authority. Now, it's definitely true when you look at the green-related FDI that the GCC sovereign entities, the sovereign ecosystem are funding. There's still the largest size number, amount of money being invested is actually in Europe, in places like that. And Valentina, you and I, we talk regularly about how GCC funds see the investment environment in different parts of the ecosystem here in the United States. So that question mark both of what's the money coming in, what's the money going out, and to where, I think is very active. What I will say is that I do think across the GCC, there is really this all of the above, adding more power, adding more sort of dynamics. I mean, you have some countries that are moving more ahead with nuclear, a lot of countries interested in small, modular reactors. It's a trend I hear also in other countries that I talk about it. So, but you asked, and then, so I think when we're talking about the GCC, there's also, so not only is there this outbound piece, but there's also the question of, well, if there's a lot of domestic government investment or government pump priming for some of the projects, maybe there hasn't always been as much of a scope for foreign investment. Now, I will say that foreign companies they're still seeking capital in the GCC. When a lot of my conversations when I was at Abu Dhabi Global Markets, Abu Dhabi Finance Week last week, there was a lot about smaller companies in Africa seeking not only climate tech money, but health tech money and the like. So I think there's some different ecosystems that are sort of emerging out, but there is this element. But in terms of this question of the capital coming in, I think it goes back to the discussions of the previous panel, not only the minister, but the panel we had right before lunch, some of these other different question marks about transparency, and the like. I think there's been a lot of strides, but I think there's probably still more work to be done. When we move beyond climate tech and climate green FDI to sort of other technology dynamics, in both of those areas, I do think there's a bit of a geoeconomic or geostrategic tension. Justin, up on the same panel a couple hours ago, said he didn't think geostrategic risks were a big concern. And they might not be for sort of local regional political challenges. But I think in this context of US concerns about Chinese role in key supply chains, I do think that there is a factor there. And in some segments of the tech ecosystem, there are parallel processes, investment funds set up that will invest almost anywhere but China, or will bring in technology from anywhere but China, and those who will involve that. So I do think that is a challenge that different countries and projects in the GCC have to face with, just as those in other jurisdictions have to. And so in the renewable space, we have the dynamic where wind and solar technology very much dominated by China. And then when you get into the AI-related projects and a number of other strategic issues sort of can come up, and we'll see where that goes. I would imagine delegations from some of the GCC nations here in town this week were hoping that they could sort of make some progress on chip agreements and just in general AI project development. I've moved beyond that, so I'm going to stop.
No, this is great. Thank you very much, because I actually wanted to
You want to segue?
Focus out a little bit on the geostrategic area, and I wanted to go to Dr. Baabood, who I thank you so much for joining us remotely. I believe it's quite late out there, so we really appreciate it.
Yeah.
And I wanted to ask your help to situate where we are when it comes to sort of investment in innovation in the Gulf. What I mean by that is we're here in Washington at an extremely interesting time in so many ways. The IMF meetings are going on this week amid an ongoing global tariff war and a lot of uncertainty surrounding where that goes, with implications for consumer demand, global consumer demand, oil prices. OPEC Plus has been unwinding production cuts, with also repercussion on oil prices. We've mentioned President Trump's sort of new approach to policy across the board, including on energy. And of course, the geopolitics of the region of the Middle East are ever surprising, ever changing, ever complex. Perhaps we'll touch a little bit more on what's happening later. But right now, I wanted to ask you, through all this chaos and volatility, the Gulf states have been, seems to me, a rather steady hand in what they're doing. They remain quite focused on their diversification pushes. How do you think they see this really sort of confusing, if you will, external environment? Is this a threat to their programs? Is this an opportunity to stand out?
Thank you very much, Valentina, and good morning or good afternoon to you. Yes, it is a bit late, but it's a pleasure to be with you. Well, I think the short answer to your question, Valentina, is that the Gulf states obviously see what is happening now in terms of current turbulences. They see it less in a negative shock, but they see it more as a stress test and an opportunity. This is a moment that perhaps forces them to adapt strategic recalibration, accelerating of their long-standing innovation and investment plans and standing plans. And they try to balance the risk with the reward. Obviously, with different levers that different Gulf states can employ. So the challenges, they are there, but they are not paralysis. The Gulf states are actually acutely aware of these risks. They see global trade tensions, especially between US and China and the friction there. They see the shifting US energy policy, climate pressure, and the volatile regional security. All these poses serious threats. And if you add to that the reduced export demand on their oil and gas, also adds to that and can affect capital flow and investment. And if you add, you can also combine that there are some diplomatic shocks we have seen recently, and we've seen some there are energy transition costs that are involved. But rather than reacting defensively, we've seen that the Gulf states who are already trying to diversify their economies away from being dependent on oil and gas, these challenges have become as a force acceleration for them, for their structural transitions. They already believe that they need to make this. So in this view, they see the world is normal. It's a new normal. There is always going to be multipolar economic blocks. There's going to be strategic competition. There's going to be internal fragilities. There's going to be disruption to supply chain, and there's going to be, regional geopolitical fragmentation. So they seem to be exposed to these shocks, but they have learned how to absorb these shocks and and diversify their economies and accelerate this diversification process. So this global power competition actually forces them to do so. And in a way, they could look at it, and they do look at it in a positive sense, because this geopolitical competition enables them to have strategic space to maneuver and position themselves not as just energy producers, but as trade and technology hubs, and they can play a very important intermediate roles. So rather than duck and cover, they tend to pivot, and they hedge and compete, try to shape a favorable trajectory rather than, be buffeted by all these challenges. So I think what we are seeing here is these global challenges are making the Gulf states think hard, work hard, and especially on their energy transition, which they see it as both a constraint and an opportunity. They are working very hard in developing their technology hubs and AI and sovereign capabilities, and they have come up with some AI strategies, and they are also reorienting their trade and logistics and connectivity, leveraging their position between Europe, between Asia, Africa, and Europe, and working as logistical corridors and trade corridors, leveraging their ports and free zones, building some new trade alliances and agreements. They're trying to diversify their partnership to reduce the dependency on any single power block. And some see this trade war between US and China as a chance to capture portions of redirected trade flows, or serve as neutral intermediaries in this sense. So what we are seeing is that there is some strategic hedging, some diplomatic positioning, and some technical and technological and AI investment. Obviously, there are challenges, but these challenges are, expected, and they are manageable. And it is an inflection point that the world is going through, and the Gulf states are trying to be ahead of this storm, as it were, and they are trying to, rather than shifting, they are preemptively adapting to the situation. They accept there will be losses, setbacks, painful adjustment, but they see inaction. They don't see inaction as a viable strategy. So they aim to shape emerging order in energy, trade, tech, rather than simply respond to it. And they try to blend their conservatism with innovation by maintaining macroeconomic stability and hedges, while nudging towards future transformation. In short, Valentina, they see the uncertainty as a test, but also as a window of opportunity. The ambitions for the Gulf states not to be passive victims of this global shift, but being a proactive actors in them, benefiting from them, and trying to diversify their economies to the new realm, as it were. Thank you.
Thank you very much. This was very, very helpful. Director General, I wanted to come back to you about the transition and investment in the transition in particular. There seems to be, and you sort of hinted at it, but there seems to be a question of scale capacity in terms of having the projects that can make the transition real. How are you working, if you can elaborate on how you're working on sort of creating the opportunities for investors to really come in at a level that is important.
When we are talking about energy, I want just highlight one critical element. We are a country currently exporting energy. We will keep exporting our energy, and also in the future, we will try to diversify, bringing new kind of energy setup. But we will keep exporting this kind of energy because we are blessed with certain kind of unique setup within the country, enabling us to do so. And I think more specifically when we are talking about the energy transition. In Oman, currently we are executing several of these projects, whether it's a solar and wind. And also we recently float one tender to seek for solar plus battery. Also we are thinking about solar plus hydropower, hydro storage. So all of these opportunities within the Oman are ongoing, and for us it is great. And more specifically, when we are now connected with GCC grid, if there is any extra power, excess power, we could easily, send it through GCC connection. So I think that's give us certain kind of opportunity, and also open our eyes on very special opportunity available within the region, and we have to keep, doing so. We have to keep expanding within this setup. Second, I know a lot of friends, they don't like talking about green hydrogen, but in Oman, rather than I'm talking about green hydrogen because I know several times you hear about it, but I would call in the transition period, we do have alternative color of green, I would call it. White hydrogen is there, blue hydrogen is there, and I know people, they don't like talking about hydrogen much because there is no kind of tangible outcome out of this. But what I want to assure for the audience here, Oman working very hard in order to develop this file, ensure that it will be moving toward the execution. Serious discussion now happening in the country for the white hydrogen. It is basically nature-based hydrogen. It's available within Oman, but it's a matter of how you take it to the commercial stage. Second element, Oman is blessed with natural gas. We do have a natural gas. So if you use the natural gas, you capture the CO2, then you end up with a blue hydrogen, which is a mid-term kind of solution before you go to the green hydrogen. So that's also happening in Oman, and also we are putting a lot of energy and time in order to develop this further and ensure it will go to the execution stage. Whatever I mention, all of these are food for the decarbonization plan. So for us in Oman, whenever there is certain kind of opportunity attached with the decarbonization, we try our best to make it faster, accelerate the process, and ensure it will be executed. One critical element I want to highlight: green hydrogen projects in Oman is very critical. It will come down the road. Oman have certain kind of a plan by 2030 to produce 1 million. I know that's something very aggressive, but we are working day and night to make this happening. When technology will support, and I think that's across all the world, one of the main difficulties facing the green hydrogen is the setup of the technology. The current technology is very expensive, and with the time, it will become cheaper. So we don't have to start, thinking about, can I produce a green hydrogen by 2030, reaching 1 million? No. How we can bridge that gap? How we can, transfer ourselves from the current situation toward 2030 with thinking with alternative plan and solutions in order to make it happening. If we keep saying that it will never happen, then we will not start. And I think the first step with Oman taking that serious is having a dedicated team, a company called Hydrom, just mobilized with the right resources in order to drive further the implementation of the green hydrogen project in the country.
We are hearing, of course, a lot about Oman. I wonder, Rachel, if you can discuss, again, going back to the wider GCC and in terms of investment in the transition, but also AI, critical minerals, new, innovative sort of cutting edge industries. Are there countries that are performing better than others? And I don't mean that as a sort of scoring exercise, but more like, what are the lessons learned? What are the things that are being done where that others could replicate?
Yeah, and I think in this space, it goes back to, as with anything in economic development, the starting points and the specific endowments and the political economy challenges that different countries in the GCC face. We were talking earlier about Saudi Arabia, and on the panel earlier, sort of dividing the countries into sort of those where not only was there a greater sort of amount of population and the job creation needs are different. But one of the metrics I've liked to use for a long time, maybe back as far away as when Dr. Danya was studying at NYU, was to think about oil wealth per capita, right, as an important metric. And you look at countries like Bahrain and of course, very little oil wealth per capita, but still high reliance in the budget, at least until recently, which was always one of those big warning signs that when I was looking at the debt, I would put. And then countries like Oman that have made this sort of adjustment. But in the region, if we're thinking about the new projects, I see a new phase in economic diversification, rather than just trying to bring new industries, trying to develop new industries that haven't necessarily been developed elsewhere. So I think about, in Saudi Arabia, this goal of trying to develop electric vehicle supply chains, including at home, right? And that ties into the conversation we were having just earlier with this question about critical minerals and critical mineral processing. And processing is really the key, the sort of place, the gap that there really is in the global economy, which China really has dominated. But within that, even setting aside the electric vehicle supply chain, of course, critical minerals are bigger than just battery minerals. There's a whole set of critical minerals that are important in the defense industrial base on a global level. We've seen the UAE, again, back to this outward investment piece, not just inward, invest across Africa, first in raw material sort of extraction, but now in some new processing sort of elements. And this desire also to partner and get technology transferred to then maybe create a technology stack that then can be exported. So I'm thinking about the Abu Dhabi kind of approach to some of the AI projects through G42, where whom I met with back in December. That the goal is to work with U.S. partners and others, but then to be thinking about deploying that across Africa. Right. There was a good report out from Emirates NBD, earlier today that sort of talked about the data center build out across the region, but especially the UAE. I mean, we're talking about not only data centers being built, but the power infrastructure needed to fuel those data centers and to fuel the cooling required to also support both those data centers, but also the fact this is all happening in a world that is warming. Right? I was in the Paris airport yesterday where there were ads for come to Abu Dhabi in the summer. And I said, I'm not sure I buy that. but that was, there were also a lot of Ronaldo's faces saying come to Saudi Arabia. It was a little vaguer which time of year we were supposed to come to, the French audience was supposed to come. But in any case, I digress. I think there's a lot of different lessons being learned. Even within the UAE, I see a different approach to AI between Dubai and Abu Dhabi, as often is the case with things between those different emirates. And that is partly a function of what's the investment ecosystem. So in Dubai, it's much more private or sort of what I'd call quasi-private, public-private, entities. In Abu Dhabi, it's a more, sort of the government, the Abu Dhabi Inc. sovereign infrastructure leading these things. It's a little more top-down in that area. And then, as I say, and then in Saudi Arabia, it's a little bit mixed. But again, government-led, somewhat top-down. In that way. We have Qatar also sort of pushing ahead with investments in this area and investments abroad in some of these sectors. But I do think that the larger the population to wealth ratio, the higher a need there is to really think about employment at different levels of the skills, sector. But I think there is an understanding now in the Gulf that, that there really can't be a competition with these very low-cost, labor-intensive industries, which when I started tracking the region more than 20 years ago, I think there was this whole view of, we can bring back factories from Asia. And I think there was a recognition that maybe bring the robots too, but otherwise, there's a need to really move up the value curve to create new industries and that way. And I think that that's where AI and innovation is sort of a part of this. There's also a desire to really deploy these new tools to force efficiency in a whole range of industries. And that's something, maybe sometimes in leapfrogging is something that can occur. But I do think there is this concern now, and there is this concern now in who the sort of geopolitical partners, will be, and maybe even some concern about the speed with some things move fast in this town here, even when the government is shut down, and some things move more slowly. And I think on the one hand, I think this is an environment where regional actors welcome some degree of the transactional nature and issue-specific cooperation that may be present in the U.S. ecosystem. But I think there's still a bandwidth issue, right? And I was in mostly just the UAE 2 weeks ago. But I think there was some concern of, they're so focused on China in Washington that they've forgotten that we want to buy chips too. And so I think there's some different sort of tensions, some different tensions going on. And there will be innovations that come out of the point of the crisis point of how do you ration power? How do you ration when costs go up, maybe not domestically, but globally? What efficiencies materialize? We've seen that already with China and DeepSeek, of lack of access to US chips maybe prompts some innovation. So I think that there are hubs, there are sandboxes, there's some ecosystems being developed in almost all of the Gulf countries that maybe not yet in Kuwait. We'll see what happens. There, I'm heartened by some of the sort of return to the capital markets and some infrastructure, financial infrastructure that is prompting some new developments, and maybe we'll see where things go. Sorry, I diverged from your question.
No, that's perfect. I'm gonna go back to Dr. Baabood for my last question, but meanwhile, think up maybe one or two questions. We might be able to take one or two from the audience if our gracious hosts allow. But I wanted to go back to Dr. Baabood to stay on the question of challenges, and I mean it in a very practical sense. One of the things that has happened this week is that there is maybe, perhaps, who knows, we will take a long time to figure out some sort of a path to peace in the Middle East. Again, maybe. And I don't ask you to have a crystal ball. It's early days to understand where that goes. But with everything that's happened in the past 2 years, globally and in the region, what are, again, if you're in the Gulf and you're looking at the next challenges, we've mentioned before supply chain disruptions. Does that remain a problem? Is it investment bottlenecks? Is it uncertainty emanating from the US? Sort of what are they looking at in practice for the next 12 months in terms of, again, threats and challenges to their diversification programs?
Well, thank you, Valentina. The diversification program has started before. It's been on the agenda before the current crisis and will continue to be. The GCC innovation push looks pretty resilient. There are, of course, notes from the IMF that says, inflation is contained. There are strong buffers. There is noticeable continued non-oil expansion despite, of course, the oil cuts and the global headwinds. We are also seeing, the capital formation is still continuing. The sovereign wealth fund has been active across borders, investors, not only domestically, but also regionally, as has been mentioned, and internationally. We've seen a huge tech build-up, acceleration, UAE, for example, with AI, data centers, Microsoft Copilot, etc. We've seen venture capital is stabilizing, and the ambitions are intact to a very large extent. However, to answer your question, these don't come out without risks. And the risks for a region like the Gulf states are enormous. There is, of course, geopolitical risks that can spill over into trade and tech channels. There are also other risks like execution risk and talent bottlenecks. There is also financing and policy credibility risk. So in terms of geopolitical risks, we have seen that the Gulf states have been subjected to attacks, and that is unprecedented to a very large extent, namely Qatar, but also there has been threats to the Gulf state. So this is something that the Gulf states will need to live up and understand the consequences of this, and to what extent this is going to affect and disrupt their plans. Obviously, if you add to that, there were Red Sea attacks. There's been, there has been issues, of course, with in the Strait of Hormuz as well. If there's going to be any attacks on Iran, it can escalate the tension and can increase the oil prices, and this could lead to some uncertainty as well. So geopolitical risks are always going to be there because the region, as we know, is fraught with conflicts and wars and so on. And we are witnessing as we speak, one of them is unfolding now or being resolved. However, the Gulf states have been very, very careful in managing that, in the sense that they have been trying to work as mediators, peace initiators, and so on, and they have done a great job in diffusing tension around the region. But apart from the maritime risk, if you allow me, Valentina, there are also other risks that the Gulf states face in their future transformation, as it were. And this is, linked to the trade war between China and the United States, because this is going to affect them in terms of the licenses and in terms of hardware partners, etc. And that also adds to their challenge, as it were. And also, if there was going to be any issues with the oil price, that especially if the oil price is going to go down, and it might, and that's a possibility, there is also a risk of how they can finance all these different plans and strategies and transformation plans. So there is also a huge risk there related to the price of the barrel of oil. If you add to that, there is also the execution capacity and talent. We have to remember that all these plans, aggressive as they are, and ambitious as they are, they compete for the same kind of engineers, technicians, operators, regulators, and there are shortages that can inflate costs or slow the delivery. And if you add to all of this, there is also the cyber risk as well. We have seen that some of the Gulf states have been attacked through cyber attacks, and there has been a regional spillover. Whether conflict with Iran or in Gaza. So all of that can lead to can add to the challenges. And I would also add that there are some policy predictability challenges. There are shifting standards. There is sometimes opaque procurement standards that can deter or delay the partners and the slow of the commercialization. So what can the Gulf states do? They need to work very hard to develop their trade and logistics and harden that routes, as it were, and try and work together in terms of getting their security, regional security intact. And we've seen some of this already taking place. They're trying to maintain a clean supply chain for technology and data, and building data and AI governance baseline. And we've seen some work that they are doing. They're also investing heavily in the human capital by trying to, of course, increase the domestic human capital, but also allow for targeted visas and for people who can help them in terms of AI, machine learning, etc. And they're also working very hard in getting their finances and sovereign wealth funds, not just to invest abroad, which they are doing for future generations, but also they are linking their investment abroad with developing local industry and local capacity as well. They're also working in a very strong way in creating a regional regulatory integration, like fast-track GCC-wide passports for fintech, for AI, and cloud services, etc. And they're building their energy system resilience, where, as has been mentioned, they're not just relying on oil and gas. They are now, looking at nuclear where applicable. There's carbon capture, and of course, all these new technologies, alternative energy resources like solar, and wind. But most importantly, it's been mentioned earlier by developing into green and different shades of hydrogen. So the GCC is still, showing, or the Gulf states are showing their resilience, but at the same time, they are facing these challenges. And the thing to watch for is if there is going to be any choke point risks, like the Red Sea, the Hormuz Strait, is there going to be any export control posture on advanced tech because of the China and US competition, as it were, and quarrels? And is there going to be, how is their physical stance are going to be shaped vis-a-vis the oil price? So if these dials, as it were, are stable, the region innovation thesis and system will remain investable. And in selected segments like AI, infrastructure, grid logistics, tech and climate and water, these are really compelling industries that the Gulf states are seriously looking into developing them. And of course, taking into consideration that there are challenges, but they have built resilience and they have built capacity and they have built experience in how to deal with these different geopolitical challenges. I'll stop there, Valentina, if you like.
Well, thank you very much.
Happy to answer.
And I think I've seen already 2 requests for questions. I will go with them and close it there. Does that work? Yeah. Does that work for everybody here? Yep. So there is that gentleman and here.
Thanks. Mark Austin, 25 years a health expert in the Middle East for USAID. I'm looking at this. This has been a fantastic conversation. I've been looking at this with a more sustainable development lens. And in particular, all the innovation that we've talked about, it's been primarily around energy, but there's a lot of innovation in the health tech.
Yeah.
Whether it's genomic research, whether it's virtual hospitals like the Sahab facility, set up in Saudi. I'm wanting to understand from you, and perhaps this would have been a better conversation earlier in one of the broader panels, but still, looking at how does the vision, or how do the neighbors of Jordan, of Yemen, of Egypt, of Syria and Lebanon. We've heard from Syria today, which was fantastic. But how do these fit within that vision of strategic growth and economic investment, short-term and long-term? Clearly, we don't want to be just reactionary, but how do our neighboring countries fit in the broader strategic vision of investment and growth?
Perhaps we can take the second one as well, and then.
Thank you so much. So with the region with 50% of youth population, I didn't hear a lot about cryptocurrency, about the esports World Cup, about the data mining, and about the sports market, which will be around $600 billion in 2028. And MBS of Saudi Arabia, His Royal Highness, invested in getting Ronaldo, Mane, Neymar, Benzema, Mahrez for a reason. I think there is that digital / economic / whatever social thing that we need to tackle. Speaking about the modern currency, the modern possibilities. Not only discussing oil and gas, which is very important, or even hydrogen, because I don't think these investments were done just for the spending of time or just for the pleasure of, the population that Saudi Arabia won over Argentina or whatever. But there is actually a way for doing something called tokenization right now. And I think this is maybe another session to be hosted by the Gulf International Forum, maybe later on, or with a small feedback from your side. What do you think, and where do you think the Gulf countries, the GCC, stand when it turns to cryptocurrency, to data mining, and other contemporary aspects? Thank you.
Excellent questions, both. I should apologize for not discussing these topics. I'm old. That's why they have not been discussed. I'm far older than the population in the GCC, and cryptocurrencies, I don't understand. Tokenization, I don't understand. And if you ask me, it's ripe with a lot of risks. It's actually one of the areas where I'm a little bit more skeptical about what's happening. But it is an absolutely fair point. Perhaps we can somewhat combine them, looking at health, youth, region, and all of these investments that are meant for the future. Perhaps, Rachel, you can start, and then we'll go around, including some final remarks.
And to reinforce your point, I think it was just in the last 10 days, we had Saudi Arabia participating in I believe what was in dollar terms one of the largest leverage buyouts, taking a company private, Electronic Arts. Part of it was, this sort of tech innovation-driven economy. There's so many different aspects, and so, with limited time, so I'm really glad you brought it up. And I've done a lot of work trying to track what different Gulf sovereign investors have been doing, not just in this space, but across the board. And it's helpful sometimes that Saudi Arabia's public investment fund can be a little easier to track some of the investments they make than some of the others. And this sort of cluster of investments in gaming, in game development, esports, really quite a sizable subset, up there with the the electric vehicle ecosystem that I was mentioning earlier. The tokenization discussion maybe does deserve its own conversation. I was almost going to ask the Syrian minister about financial development and that sort of element, a key one. But yes, I think both physical sport, esports, it's really key part of Vision 2030. It's a key part of the visions throughout the region. I'll leave my sort of Omani colleague to speak about its role in Oman, but I think across the board also feeds into tourism, the big events, as well as a desire to keep young populations active and healthy, right? This is a region that if we look at the older population, some of the health risks and whether it's diabetes risks or other things like that, high. So it all ties in there. And clearly there is a desire, as there's a desire to look for higher quality jobs, ones that can benefit from the technological and skill development, which I guess brings us to your question on the regional piece. I mean, there's other things to be said on health tech and health innovation and health clusters, but I mean, I think you've listed a variety, you've listed countries that are newly maybe open for Gulf investment, but ones that there's been a long-standing element. If we think about Egypt, for example, beneficiary of one of the largest Emirati sizable sort of investments, there's a question there about what type of economic development that then fosters. Does it get back to a more, sort of top-down sort of political, political economy dynamic? But I do think part of this element in which Gulf sovereign government investment is closer to home, it not only means domestically, but it also means in the region. So that doesn't mean, people always, call me up and they say, these funds not going to invest in the U.S. anymore. Are they going to invest in China? And the thing is, a lot of them are doing a bit all of the above. And it depends which fund. But I think across the board, you see much more strategic investment. A chunky investment, and that includes in the region. But there are different challenges, I think, when you think about, as we were talking about Syria earlier. There's a great desire in the region to invest in Syria, but there's both the sanctions element, there's always in these kind of circumstances different strings that different investors, want to see happening. And conditionality isn't always the worst thing, but I think right now sometimes it's hard to define what that looks like. I'll let others give their final remarks.
Perhaps on sort of the financial innovation side of things and how it affects your work or any other thoughts?
I'll just try to be short and efficient on that, so a few words only. So when you think about GCC, so every country, they have their own setup. And I like, for example, what's happening currently in Saudi. I think that's a part of, again, their plan to diversify the economy, thinking about, wider range of activity which could attract certain kind of business. Similarly happened in Oman. I think when Oman, if you go and read Oman Vision 2040, we have special attention, for example, for a specific sector. Take some of them, tourism. Tourism is, growing in the country. We are putting a lot of, efforts to make, tourism is larger and larger in the region. Mm-hmm. But also, in addition to that, thinking about the mining, because that's also something very critical. Oman, based on history, it was very well-known country producing, copper. And nowadays, we do have different mix of, metals, which could be a source of material for future kind of, industry and production. Still, I want just to highlight something about data centers, because I think that's something could fit directly to what we are thinking in Oman. I think that's very high intensive energy, kind of business. If you will be able to supply a good, source of energy, I think you can easily accommodate this kind of business. I think GCC, they could all think about this. But in addition, what's make Oman, a little bit more unique in attracting this kind of business, our location, because we are nearby the Indian Ocean, where the Indian Ocean hosted all of these, undersea cable connection between, east and west. I think that's give really a critical elements toward Oman, and I think that Oman is already seriously thinking about hosting more of data center and accommodate this kind of business. So that's in short and brief about that.
And Dr. Baabood, I'm going to ask you for parting words and wisdom.
Okay, I'll be very brief. I would say that, both excellent questions, and I think my colleagues have answered to them eloquently. But I just want to say that I think there are plans already in place for, between the Gulf states and collaborating in, either esports or data mining and cryptocurrency collaboration. That is already ongoing. Obviously, I don't have exact data on that, but I know that there are plans on that going on. But very briefly, on regional issues, I think the Gulf states have realized that they cannot live in the same pace of development if they want to continue with their diversification and their economic stability in a world that is not stable around them, in a region that's not stable around them. So you can see that they are not only trying to put down some of the fires around and bring in peace through dialogue and through mediation, but also they're trying now to cooperate with the regional countries, whether it is Syria, it is Jordan, Egypt. We've seen in Iraq, there are also links now, electricity grid between the GCC and Iraq. There is also the whole idea of the development route that goes from all the way from Turkey and Europe, of course, all the way via Iraq to the Gulf states. There are a number of collaboration projects that the GCC states are now contemplating with the regional countries, including Yemen and the whole region around them. And I think also there are already talks now about the whole idea of rebuilding and reconstruction of all the damage that has been done in the region, not only in Gaza, which is of course a top priority, but Lebanon, Syria, and Yemen. And if you want to add to that, of course, Somalia and Sudan, there is a huge need for reconstruction, rebuilding, whether it is medical, but also housing, etc., smart cities. These are huge projects that are going to be in the region where the Gulf states are going to play a very important role, and I think the international community as well, and the international partners and investors will have an opportunity to play a role in this. I'll stop here if you like, Valentina.
Thank you very much. This was wonderful. I hope you all had as much fun as I did. And I'm going to give it back to our host.